Welcome back. You're watching Commodity Champions, and the gold price has hit fresh record highs this week. They're being supported by a decline in dollar index, growing uncertainty ahead of the US presidential elections, geopolitical tensions and inflation. To discuss the price formation from here on, I am now joined by Philip Newman. He's Managing Director for Metal Focus London. Philip, hi, thank you so much for joining us. Interesting times, clearly, with the kind of run-up that we've seen in gold prices. Too much, too soon, would you say, or did you see this coming?
Well, to be honest, I'm not sure if any of us saw this coming so quickly, really. And I think you hit the nail on the head. I think it is perhaps a little bit too quickly in terms of that run-up that we have seen. So from our point of view, we do expect to see a pullback, a short-term correction. We think that a lot of this has really been built on sort of speculative activity. But I mean, ultimately, I think we're still quite positive for the price. But I think in the short term, we do think there'll be a bit of a pullback.
So, Philip, if you had to forecast the prices from here, I mean, the first quarter clearly has seen a wide range of 1992 on the lower side to almost 2200 on the higher side. How would you look at the rest of the year now?
Well, I think what we think, is as I said, the run-up has been, so sharp that it does seem likely that you will have perhaps some of the upwards momentum coming out of the market. We've seen prices now around 2070 level for a little bit of time. I think that could encourage some profit taking. That could take gold back down below $2,000 in the short term. Maybe down to perhaps even below 1950. I don't think that is out of the question. But of course, the markets are now very heavily betting that the Fed will start to reduce rates in June. The Fed, I think, has been quite clear that it's looking for around 3 rate cuts over the rest of this year. I think there's no reason to disagree with those pronouncements. But we think that once the Fed does start to reduce rates, that will encourage the markets to really come back in, some long positions being rebuilt, and that could take gold higher. I think the other really important point is that, when we think about the lows that gold could see, they're equally important as well, equally valid, that those lows do seem very well defended. If you were to see a gold price, as I said, in dollar terms below 1950, we think the physical markets will come in a very substantial way, be that India or China or other jurisdictions where you have that price-sensitive buying. And of course, the other area which has been so important and of growing importance over the past couple of years is the central bank community and the very high level of purchase we see from there. And again, I think that also helps to give you that solidity to the floor in the gold market as well.
So, Philip, on the higher side, 2200 is done. Would you, even after we do see a pullback, let's say up to 1950, would that take the prices back around 2200, 2300? I mean, those are the kind of levels that are still on forecast.
Well, I mean, now that the market has seen these highs, I think as we move through the year and we start to see those rate cuts coming, I think what will then be important is, or exceptionally important, is the language that the Fed uses as it starts to reduce rates. And if we assume, for example, it stays with the 3 rate cuts for the second half of this year, the markets are currently expecting that the Fed will have a much quicker pace in 2025. And so I think you could see further upside. If we focus on this year, we think that you could hit a new high in the back end of 2024. And therefore, the possibility of getting, through 2200, I think is certainly on the cards. And of course, the other factor that I haven't touched on is that, and you certainly did, is about the geopolitical situation, the uncertainty which is out there, that is, unfortunately, doesn't seem to about to end anytime soon. And I think to some extent that will also help to encourage a safe haven bid for gold as well.
Philip, you talked about the physical buying, and well, absolutely, I can tell you about the Indian markets because one, the scrap sales are high. to India, gold is trading on a discount right now. And the jewelers tell me that the sales are down up to 30 to 40% of what they normally see. So, well, yes, the physical buying is something to watch out for from here on. And there's no wedding season in India right now. I mean, that is yet another reason for a bit of a dent in buying here. But going forward, which markets would you watch out for physical buying? India isn't currently doing so well, but we've seen China buying a lot.
That's very true. I mean, January and February were, exceptionally strong in China in terms of the physical investment, in terms of the bar side of the market. But I think for all of these markets, and obviously India is leading that charge, you need to have price stability. When you have this price volatility, consumers and the trade, they'll be on the sidelines waiting to see where prices settle. And I think to my point about, will we see gold back below 2,000? I think if we do, that would encourage a lot of restocking. That would see the recycling weaken in some of these jurisdictions. And I think you can see buying return in force. So I certainly wouldn't rule out India by any stretch. And of course, if the markets, are getting used to these prices as well, over $2,000, if that becomes the new norm, if I can use that phrase, then I think also that would encourage, the likes of India, the Middle East and other jurisdictions to come back into the market as well. But I think elsewhere, what we've seen, some of the Western locations, for example, in the US and Europe, in the bar market, the retail investment market, we've certainly seen liquidations into these prices. So investors really, booking profits. So, there hasn't been a great deal of buying in some of those locations up until now anyway.
Fair point that. Philip, we are in a market where almost everything is surging at the same time. I mean, Bitcoin is at an all-time high. Equity markets have done quite well. Gold is trading at an all-time highs as well. I mean, yes, the dollar index is at an 8-week lows, but it isn't down and out yet. And as you said, there is a lot of speculative buying. The fund position is on the higher side as well. What would you watch out in these all these asset classes, and how would you relate it with gold?
Sure. I mean, I'm not entirely sure I would relate too much of the upside in Bitcoin and in the cryptos to what's going on. We think about the launch of some of those ETFs. I think that has been pivotal in that move. I think in terms of equities, of course, you look at expectations for the US. Will we see a hard landing or soft landing? I think it's very much, moving towards the latter at the very least. The US economy is still obviously in very rude health. Yes, the latest data prints, did point to a little bit of uncertainty, and that was obviously gold supportive. But I think it's interesting that we are seeing these assets moving together. And you can make a case that for those investors that are owning gold and are looking to, maintain a certain share of gold in those holdings, because you've got, yes, gold moving up in record highs as you touched on, but the equity is also moving up as well. That may well be encouraging some acquisition on the gold space. I think what's all really fascinating is the fact that, we haven't, looking at the global marketplace, and, we haven't seen ETFs necessarily responding. Again, looking at global holdings of ETFs. And I think that's also been quite fascinating, and also tells us it's much more speculative related. And so I think, looking ahead, we've got to see, again, will those spec positions stay? As I said, my earlier point, perhaps some of the momentum in the price upside dissipates. We'll see some selling into that. We could see perhaps some shorts temporarily built, but those shorts are now, if you look on the CME, those shorts in gold are the lowest we've seen since July. So I think there's room for those to be rebuilt in the short term. But again, looking further out to the back end of this year, we think that could be a temporary position. Okay. And then at that stage, we think, again, as the Fed starts to reduce rates, long positions being rebuilt, and that could be one of the driving charges for gold to, potentially hit new highs.
All right. So whichever way we see, and as you pointed out, 2024, a fewer rate cuts, but 2025 could see more rate cuts, and that definitely is very supportive for gold. Philip, as always, thank you so much for joining us here at CNBC-TV18 and taking us through what really matters with gold. With that, it's a wrap on this edition of Commodity Champions. Thank you for watching.